Hello everyone and welcome to today's morning report analysis videos on Thursday 9th of February with me, Richard Perry, market analyst at Hantec Markets. We've got a fairly sort of flattish to slightly positive open on the markets on equities in Europe. That sort of follows a pretty neutral session on Wall Street and mixed trading in Asia, nothing too significant. In terms of Forex markets, interesting sort of rebound. The dollar had initially looked to be pulling a little bit of strength, but that's sort of unwound as we sort of come sort of deeper into the European session. Dollar's actually trading not far off the day lows today. Now, I sort of spoke in the morning report about the fact that the dollar has been rising despite the fact that Treasury yields have been falling on the 2-year and the 10-year. And basically, Treasury yields, I think, are the main driver going forward of the dollar. And I don't think that dollar strength is going to continue, really, on the back of that. So this little tick to the upside that we've seen in the last few days on the dollar, I don't think it's going to last. But you've got an interesting balancing factor of the euro. Now, the euro has been weaker as these yield spreads have been sharply moving higher of German over French yields. But that has just come back a little bit, so the euro has just gained a bit of support today, and that has helped the euro dollar bounce a bit today. So euro dollar outlook a little bit mixed near term, and I'll sort of take you through the chart analysis in a bit. However, it is interesting that the dollar has just unwound some of that early sort of gains that it saw. Now, there's not a great deal of direction across markets really, and will be reflected in my analysis videos later, but certainly I think the markets are sort of entering into a bit of a sort of consolidation phase really. Equities struggling, Forex struggling, although we do have a safe haven shift nonetheless, because we've got, generally speaking, the yen, which is stronger, gold, which is stronger, and as I said, treasury yields, which are falling. So that pretty much points towards safe haven sort of bias there. But it's interesting that this is all taking place at the moment with nothing really to sort of drive equity markets. Sort of on the economic calendar, again, a very limited economic calendar day today. Pretty much just looking out for the jobless claims this afternoon at 1:30, which are expected to basically remain around 250,000. Nothing really doing there. So that takes me to my chart today, which is silver. Now, as I said, gold is pulling higher. Silver is also pulling higher. It's in a trend channel, nice trend channel. Momentum indicators supporting it. RSI up towards 70, so perhaps that sort of just caps the gains a little bit, but you sort of look at the Bollinger Bands, you think they're pretty strong really. The market is up against sort of the top Bollinger Band, so that's strong in conjunction with these positive momentum indicators. So little corrections are a chance to buy, I think, on silver. It's interesting that it's now testing this pivot line that it had through October and November, around 1790, basically the high, not far off the high yesterday. So that is a little bit of a near-term resistance. Break through that, you're basically looking at 19 figure, I think, as this market continues higher. So through 1790, arguably a sort of resistance band, 1785 to 1795 area. But through that, through 18 figure really, and you're sort of looking at 19 figure again, as this trend channel continues higher. Within that trend channel, you've got a sort of bit of an uptrend in the last couple of weeks actually, which is sort of still holding, supported by these rising moving averages on the hourly chart. You've got the configuration on the RSI is strong, sort of 40 to 45 is the area where the dips get bought into, the stochastics and the RSI. The MACD lines are also positively configured as well. Not arguably as strong as it could be, but still certainly with an upside bias pulling higher. So breaking out above yesterday's high at 1787 would be a near-term bullish move, but as I said, above 1796 would be that sort of near-term breakout and then reopen 19 figure. So it looks like this silver chart is going to continue higher. However, it does have near-term resistance and needs to break through that to really continue. So with that in mind, I wish you good luck in your trading today, and I will speak to you later. Thank you.